Your dollars are your soldiers. You're the commander in chief of your dollars. Okay, your money that you work for, you're the commander in chief. You're the boss of it. So you need to make sure wherever you put it, it's the right place. That's what I do. Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. So in today's video, I'm going to share with you some of the stocks that I'm recently bullish on, that I'm buying on a consistent basis based on the market condition. Those are just 4 stocks. I'm buying 4 stocks right now based on the market conditions. Currently, we really don't know what's going on with inflation. The Fed is trying to tackle inflation. Cost of things are going up. Cost of goods are going up. So I need to invest in a certain way. So typically, I'm a dividend investor, and I also invest in growth stocks. So in today's video, I'm going to share with you the companies that I'm buying in today's video. So first things first, here are the companies that I'm buying right here. I'm buying Tesla, I'm buying Google, I'm buying VT, which is the Vanguard Total Stock Market Funds, and I'm buying ZM. ZM in particular and Google are especially a good deal right now because they are on a discount. If I look at everything, if you look at the balance sheet, you look at everything across the board, they're on a discount, and they are companies that are entrenched into our society. So before we get into the video, I always like to put out a little disclaimer that I am not a financial advisor. I'm just an individual that I share with you what I'm doing with my investments. I think this is a public good when you see other people, how they're doing with their money. Maybe it might inspire you to do some research after watching this video. Do some research into this company further to see what they're about. Take this information on this video take it for educational purposes. Okay, this is not investment advice. Check the description to read my full disclaimer. So with that out of the way, okay, first company that you guys know I'm constantly buying. If you're not new to the channel, and if you're new to the channel, it's Tesla. Okay, Tesla is a company that I'm constantly buying. I'm buying Tesla on a daily basis, and I put in $30 a day into the stock. Tesla is a company that is growing very, very fast. I want to pull up Tesla's information here so I can share that with you. So the first company that I'm purchasing, that I'm buying on a regular basis, is Tesla. Tesla is a company that is growing very, very fast. I put $30 a day into the stock. You guys can check those videos out. I have a playlist. When I started this about a year or so ago, or a year and a half ago, where I basically share with you how the portfolio is going on a regular basis. Now, if we take a quick look at the overall picture for Tesla right now, it looks pretty good. If you take a look at their fundamental business, their business is sound fundamentally. People want to buy their products. People cannot get enough of their products. People are willing to pay any amount of money for their products, and their balance sheet is a stellar balance sheet right now. Take a look at their debt right here. I always like to look first at the debt of a company. You want to check to see, if the company has too much debt, it's just like your individual, right? If you have a lot of bills to pay and you have very little money coming in, you're going to find it hard to survive. It's the same thing too with companies. The company debt, you can see they're paying it off on a regular basis. If you compare that to their revenue, what's coming in, you see their revenue is growing. And if you just take a quick look at the overview here, look at the stock price. The stock price has basically been decimated this year. It's gone down a lot this year. The stock price has dropped quite significantly. So I'm picking up the shares a little bit more than the $30 a day that I'm putting in. I'm picking up the shares there. If you look at the revenue keeps growing quarter after quarter after quarter after quarter. And they have 7 or so factories that's pumping out solar panel stuff, pumping out solar panel, batteries, cars. They have 4 car factory, massive factories that are up and running right now. So the trajectory for these numbers are only going to get bigger. The EBITDA is going up as well. Look at the free cash flow. It's been positive for the past few quarters. The net income after all the expenses has been going up nicely. You know, they've been able to grow this very, very massively. Their debt has been going down. Their cash on hand is growing. And, you know, if their EPS, their estimate is also been growing up as well. Their shares outstanding, though, has been growing. That's because they had a recent stock split. And let me show you their EPS here because it was blocking it. This is their EPS right here. Their EPS has been steadily growing as well. Now, if we look at all this, right, you see a company that it's doing very well on paper. If you also now take a look at, the website, you can see that it's taking people 6 months to a year to get their product, get the product that they have to sell, the cars, the solar panel, mega pack. It's taking them 6 months to a year to get to it. Nice. Look at their margins here. The margins are steadily going up. So Tesla is a very, very solid company. And I think it's going to keep on growing. And in my opinion, personally, this is a must own in any serious portfolio manager. Is a must own in your portfolio. You know, you cannot look at this company from a traditional lens point of view. You got to look at it as a next generation company. And this company is still growing at 50%, even at the scale that they're at. They're still growing. They're trying to get to 20 million cars that they make every year. So which will bring down the cost. They want to bring down the cost of their cars over time. So a lot of good things for Tesla. Tesla is still a must own in every single portfolio. Now, before I get into the next one, I just want to tell you, take a little moment to subscribe to the channel. Please subscribe. I'm trying to grow this community here to about 1,000 subscribers this year. That's my goal. So please subscribe. I appreciate you for that. Now let's get to the second stock that we're going to talk about today. And the second stock that we're going to talk about is Alphabet. It's going to be Google. This company, we all know this company, right? Google is a company that, you know, they're in everybody's mind. You know, if you don't know something, you got to Google it. If you need to search something, you want to Google it. If you need to do something, you check on YouTube. They are the gateway to the internet right now. You know, the biggest shareholder of the gateway to the internet. Their stock price has been decimated recently. You can see it going down. Meanwhile, you're looking at all the you know, the revenue is going up. Their you know, EBITDA is going up. The cash flow is going up. The debt is going down. The shares outstanding. The shares outstanding is going down. You know, their EPS is steadily moving up. So the numbers look good for Google as well, but the stock price is not adding up to it. So times like this is where there's dislocation in the markets. That's when you want to jump in and buy stock. I'm going to be buying $30 a day into Google up until the day that they do their stock split, and maybe even moving forward with that as well. I'm just not going to be doing a deep dive like I do with Tesla, with Google. But yeah, I'm going to be buying Google. I think Google is a company that we all have to own in our portfolio as well. So all these companies that I'm talking about today, I'm just doing a quick overview of them. I'm going to be doing a lot more deep dive into every single one of the companies, sharing with you their balance sheets, their business, their operations, just breaking down everything like I do in my other deep dive videos. So stay tuned for that. So the third company that we're going to talk about is Zim, Z-I-M, Integrated Shipping Service. Zim is a company that is involved in the shipping business. They do shipping. So basically they are the Uber and Lyft for cargo ships. So let me show you their numbers right here. This is a quick overview of their number. ZIM, Integrated Shipping Service. So they're like the Uber of shipping companies. And if you take a look at their numbers, take a look at the balance sheet here, everything looks good. The revenue is going up. And we know that the revenue is going to keep on going up just because, you know, the supply chain, they're trying to resolve themselves over time. And out of all this process, right? Out of all this process, a lot of countries are looking to localize things, which I think it would help them out anyways. And at the same time, the global economy would, I believe, would expand. And by that expanding, it will help a company like this, which their job is just to rent out space on their ships to different places all over the world. Stay tuned. I'm going to do a deep dive into this company, looking into their competitors, looking into what they do, getting you guys a little bit more familiar with this company. But if you take a quick look here, look at the price here. The price has dropped quite significantly. They used to be as low as about $45 here roughly, and it's gone up a little bit here. But let's say their price used to be as high as $85. So this is a massive drop, and we are looking at support here, right? We're looking at support at 55. Support here, 55, right here. There's one support here, another one, two here, and two here. So it looks like 55 is where it wants to cruise at the bottom, and at the top here we're looking at $85 in the price range. So I'm picking up this stock. I think it's a good buy at this point. Shout out to my boy Mufasa El Matador. He brought this to my attention. You should go subscribe to his channel. Definitely go and do that. I'm going to leave his channel in the links above that will pop out right here, so you can go subscribe to the channel. He brought it. Subscribe to his channel. He brought this to me, so I just had to shout him out. So yeah, let's look at the revenue here. You see the revenue is constantly growing because it's been good. The business has been good for them. Look at 19. They've been growing kind of steadily, right? And then COVID happened and they just shot up. So I don't know how much they're going to maintain this growth, but everything is looking good here. Let me go back to quarterlies. Everything is looking good. The revenue is going up every quarter. Earnings before tax and all these things, that's going up too. Look at their cash flow here. Their free cash flow is steadily going up. Net income is steadily going up. Debt is going down. Again, I like to say this. I like when companies don't have a lot of debt. When you don't have a lot of debt, you can take your money and invest it back into your business. So you don't have to be paying a lot of interest. Don't get me wrong. There's space in a business life where debt certainly come in handy. Debt can help you become 4 times bigger than you would be, if you don't use debt. So I'm sure they're using it wisely, but at the same time, you don't want to have too much of it. Their cash on hand has been going up. Kind of came down recently. It came down recently because they paid a huge dividend. They paid a huge dividend of $17. That is a massive dividend that they paid here. $17 per share. So if you had 100 shares, massive dividend there. But those dividend, I'm sure, is just a special dividend. So they pay roughly $2.50. $2.50 roughly on a quarterly basis. But yeah, let's look at the EPS. Steadily going up. This company is doing very well. It's doing very well. Their shares outstanding have just basically been the same. They haven't been diluting shareholders that much. If you just take a brief look at the numbers for the company, this is really good. They are doing very, very well. That is why I'm picking up this company right here. So the next company that I'm going to talk about is VT. Now, this is not necessarily an individual company. This is an ETF. Matter of fact, is a basket of stock. An ETF is a basket of stock that deals with the total stock market. There's over 4,000 companies or so in the US stock market. And this one company goes out and purchases all of those. When you buy one share of this company, right, $208. When you buy one share, you're literally purchasing 4,000 companies. You're spreading your money around that much. So with putting money into index funds like this, your money is basically safe and it's gonna grow over time. You know, if we take a look here and we look at the range that it moves up and down by, the lowest that we see here is $203, and the highest that we've seen here is $204. So right now is at 208, right about the lowest time right now to be picking up this stock. And you guys know I like buying cheap stock. I like buying stock for cheap. When stocks are beaten down, that's when you want to be buying them, because that's when it becomes less risky. You know, when you buy something that for cheap, is less risky, you know. And with a company like this, the Vanguard Total Stock Market Index Fund, you're literally buying 4,000 companies combined into one. So this is a massive thing here, and I would say it makes sense. You know, it makes sense to pick up something like this during bad times that it looks like we're gonna face in the future. It makes sense to be grabbing these companies. So last but not least here, we are gonna be talking. The next company that we're gonna be talking about is VT. VT is the Vanguard S&P 500 Total World Stock Market. Literally, you hear in the name, Total World Stock Market. So it's buying company from all over the world, gives you another form of diversification, and it's $93 for one. Okay, the range here is from 91 to about $109. Now, this right here, I think, is a good thing in your portfolio. It's a good thing in a smart investor's portfolio, just because you're buying into everything as a whole, you know. And when you buy into like this kind of index fund, it gives some sort of very well diversified portfolio. I'm a type of person that I love being diversified. I love diversification in different ways, you know. And I do that in my dividend updates, where I share with you how that portfolio is going. But I'm diversifying in so many ways, and I like it that way. So this company, Vanguard Total World Stock Market Index Fund, brings another form of diversification into your portfolio, which that is what I like. So as you can see right here, you can see that these are the list of companies that I'm looking to buy, and I'm buying them right now because they're actually very cheap. I consider them to be cheap based on their balance sheet, based on their income, based on all this kind of things. They are very cheap. Now, Google, I'm excited about. Google is having a stock split very soon. Tesla, I'm excited about. Obviously, we all know why that is. Tesla also is having another stock split coming soon that the shareholders need to vote on. There's rumors that this can be 20-for-1 stock split for Tesla. So that is also a good thing. You know, this can be a huge opportunity for a lot of people. So that is a good one. What's the next one? Zim is a shipping company. I really like what they do. They are an Uber and Lyft for shipping, basically. So I like that. And then I just put a little bit of money into the index funds. So yeah, that is what I'm doing. That is the stocks that I'm buying. Let me just really quickly scroll through the current holdings that I have in those 4 stocks. So let's quickly go over the stocks that I have. I'm not going to go into them in details. Just want to share with you my current holdings with them, and maybe in another 6 months I'll do an update to this video. But let's go over them really quickly. The first one is Tesla. You know, it goes up and down a lot. Highly volatile stock. But I currently own about $26,000 worth of Tesla, and it's about 28 shares worth of Tesla that I currently own. The next one that I own here is Zim Integrated Shipping. I currently have $604 in there that I currently own. I have about 11 shares. I'm just dollar cost averaging into this. I'm buying about 1 share a day. 1 share a day. Massive dividend payer here. Massive. So I'm collecting those dividend, and at the same time we'll be collecting some shares. I haven't gotten paid any dividend so far, just because I'm still accumulating, and I think I haven't hit an ex-dividend day yet. but I missed out on that $17 dividend. That was massive. But yeah, I own about 16 shares, and I'm gonna keep on accumulating this stock. Now, the next one that I also own here is Alphabet, Google, and I have roughly about $311 worth of Google stock. Now, I'm gonna be accumulating this like a lot because the price is down enough. They're gonna have a stock split. They're worth $1.6 trillion. I'm gonna be buying this aggressively. They don't pay dividend, unfortunately, but they do share buyback. I'm gonna be buying this aggressively, and I do every single dollar that I have, that I invest. I respect those dollars, and I do research to make sure I'm putting those dollars into the right places. Because if you put it in the right places, it can grow. Your dollars are your soldiers. Your dollars are your soldiers. You're the commander in chief of your dollars. Okay, your money that you work for, you're the commander in chief. You're the boss of it. So you need to make sure wherever you put it, it's the right place. That's what I do. That's what I do. But right now I have $311, and we'll be growing this quite significantly. I cannot wait for this stock split. So this gets to $150 or so, that we can be accumulating a lot more. I want to have, maybe 100 to like 500 shares of Google in the future. So who knows? Maybe after the stock split, it goes to $450, and in the future, that $450, maybe 20 years from now, it goes back to 1,000. It's gonna be massive gains. Now, I'm going to put the next two stock into the same category, okay? That's why I said my top 4 stocks. I'm going to put these two into the same category because they basically belong in the same category. Well, here we have the Vanguard Total World Stock ETF. It is what it is. This money that I have invested goes into the entire stock for the whole world. Now, I have 1,400. I am going to be increasing this because this is a good time to be picking this stock up, because they are so cheap and they're very well diversified. Now I have about 15 shares of this. I'm gonna make sure I keep on putting my money in there so I can be collecting this sweet dividend, and it's gonna grow over time as well as the world economy grows. Now this is VTI. I categorized the last one and this one into one bucket. But yeah, this is the total stock market for the US. This is the total US stock market. And each of these dollars are going into so many different companies. They're very well diversified. And I have about 7 shares, almost 8 shares of those. $1.3 trillion worth of asset under management in VTI. In VTI, it has $1.3 trillion in it. Very low expense ratio, and I'm collecting about 1.4%. Dividend is the slow and steady, low risk, easy way to invest your money. This is what it says. Now, it collects a little bit of money every 3 months. So the last 3 months, I collected $5. It's pretty good, So that is what I'm doing with all these companies. Some of them, they pay dividends. Some of them, they don't. But what I'm trying to do here is to buy these companies for cheap, which I believe right now they are very cheap. So yeah, I hope you enjoyed the video. The goal of this video is just to show you the 4 stocks that I'm very bullish on for the next 6 months or so. Long term, yeah, very bullish on them for the long term, but I want to accumulate money into them for the next 6 to 8 months. I think over a long period of time, those will have time to grow, and it should, positively impact my portfolio as we go forward. So if you enjoy this deep dive, consider subscribing to the channel. I do this quite often. I'm typically a dividend investor and a growth investor. I look for ways that I can grow my money. And if you want to go check out what I'm doing on this channel, I have a business on Turo. I rent out cars. I have my YouTube business here that I'm trying to get it to be monetized. So please subscribe and help me out. I have a lot of different things that I'm doing. So if you like the video, you like the journey, please stick around and see what's possible. You never know, by watching me, you never know what that can do, in terms of you doing your own things out there in the world. So thank you very much for watching. I appreciate you. Until next time, see you later. Love you all. Bye.